All right, I really wanted to cover what's going on with the US dollar these days. So the US dollar is at a 20-year high. The US dollar index, which tracks a basket of currencies, the US dollar against the Canadian, the pound, the euro, the yen, for example, is up 18% year to date. So what's going on? I'm gonna offer 3 factors that are all contributing to this. The first is that currency is generally more valuable in countries that are considered safe, stable, wealthy. And while we're seeing a lot of uncertainty throughout the world, namely the Russian war in Ukraine, the impact it's having on Europe, the Chinese continued lockdowns for their zero COVID policies, the US remains a stable, safe country where there is growth. So people feel better about buying US dollars or having their money in US dollars. Second, inflation's been really high. Central banks have been aggressive on increasing interest rates, but the US Central Bank, the Federal Reserve, has been the most aggressive. And so US debt, so if you buy US Treasury bills, US Treasury bonds, for example, you're getting a higher yield than another country, which attracts capital, attracts money to be invested in those things because it's more profitable to own. Third, energy. So energy is bought and sold in US dollars, and the US is a big exporter of energy. Right now, the cost of energy is quite high, and there's bigger demands, for example, in Europe because of the Russian war in Ukraine. So the US is exporting about 60% of its natural gas currently to Europe, and it's earning a lot of revenue because it's a high energy exporter. All of this increased demand props up or increases the value of the US dollar. Now, will this stay? We don't see any immediate relief because in order for this to reverse course, we need to see some of these factors that I just mentioned change. Meaning we might need to see a reduction in inflation, a reduction in interest rates. It could be that as economic factors tend to regulate themselves, there could be a decrease in demand for US exports because they're just so expensive. But we'll have to wait and see. Now, what are the implications? There's lots of different implications. There could be implications when you look at your portfolio or even when you think of buying US stocks and having to convert a Canadian dollar. But on a more global scale, countries that export to the United States and earn US dollars will see an increase in their earnings because the dollars that they're earning are worth more. But there are numerous countries, for example, in the emerging markets, developing countries that have their debt denominated in USD. And because of this really high US dollar, it means that their debt is a lot bigger than what it was, and they're paying for it in local currency, which has not increased in the same way. So this can be a harsh reality for them.